Okay, looks like the left side's filling in. They got a haircut. Just 8 of you here so far.
Due to our excellence here in compliance.
Do what?
Due to our excellence, we're exempt from no sense in grading all eight.
Yeah. Let's go by in 8, yeah. It's not enough snow to keep people away this morning. I used to drive from Richlands to ETSU for a night class. No matter how bad it was, I'd be there. The professor made a comment. Some people that live 2 miles down the road couldn't make it. That's usually what happens. But you know, I don't like for anybody to risk their life to make it to class. Okay, we got a lots to make up and to do. We missed Thursday before Thanksgiving, and we were off a week, so we haven't been here for 2 weeks. And we've got 2 days left. The exam is next Thursday, I guess. Is that right? Was that right, Dylan? Next Thursday at 8 o'clock. Next week is exam week. There's not classes on Tuesday. It's exam week. So after this Thursday, you'll have a week off, and I'll see you the next Thursday.
At 8?
At 8 o'clock. But if y'all don't mind, I'd like to put that up to 8:30.
Okay.
Yes.
Would that be okay with everybody?
Yeah.
Nobody will get mad and go see the president on me or anything like that.
Next Thursday at 8:30.
Next Thursday then, 8:30 it will be. 50 multiple choice. Straight out 50 multiple choice. And you can have that one page filled in on both sides now that we missed today. One page, both sides, fill in whatever you want on it. Now, we covered bank reconciliations and internal control and petty cash in chapter 8. Now, you won't need to know how to do a bank reconciliation, even in a multiple choice question. And you'll need your calculators, even in multiple choice questions, okay? All right, from there, we went to notes and probably bad debts in chapter 9. But notes receivable, now you can get a note on your book 3 different ways. You can sell something and debit notes receivable and credit sales. All right, you can loan cash to one of your customers. You debit notes receivable and credit cash. But the most common one, your book, you swap accounts receivable for notes receivable. So you debit notes receivable and write off their accounts receivable so you can start charging them interest. Now you know how to calculate interest, principal times the rate times the time. You know what maturity value is and you know what maturity date is. We've got to cover all of that. Bad debts, we haven't covered real well yet. We'll back up Thursday and cover those some more. There's 2 methods of bad debts. One is the direct write-off method. It's the easiest. It's the one that IRS likes. If it's bad, it's bad, and you debit bad debt expense and credit their accounts receivable. And if they decide to pay you later, you reverse that, and then you debit cash and credit their accounts receivable. Okay. All right. The other method was the allowance method. And under the allowance method, you got 2 situations. Or under the allowance situation, you got 2 methods, however you want to say it. One is a percent of sales. And you have to do an adjusted entry and set up an allowance for doubtful accounts and debit bad debt expense for percent of sales. The other one is called aging accounts receivable. A time it's called the balance sheet approach. Percent of sales is called the income statement approach. So that's pretty much where we were in chapter 9. Now, hopefully, all of you have chapter 8, 100% finished Cengage. All right, how about chapter 9? Who has it 100% finished? How'd you do on
I got a 99.9.
it? Okay, that's good enough. I wouldn't go back and try it over. That rounds off to 100 anyway, don't it?
Yeah.
All right. Now, how I'll count this Cengage, I'll look at all your final grades on Cengage. I'll count that percent. Now, you know what your grades are up to this point? 3 test grades. There's some people probably not here today, they don't even know their test grade on the third test. And I graded a couple of papers yesterday where they'd taken it at a distance, it was emailed to me, whatever. And the problems were not even worth grading. I just put a 40 on the test and let it go with that. And that would probably be high grade. But they didn't know anything about any of the problems. You know, you gotta be able to do some of the problems in accounting. All right, I say there's good jobs out there in accounting, and I told you all about Michael, our young student that graduates in December. He's going to work for a CPA firm near Marietta, border of Ohio, West Virginia, so forth. Okay, did anybody have any fights on Black Friday? Margot, did you not go shopping on Black Friday?
Oh, no. I had to work on Thanksgiving.
You did?
Yeah, I work at a restaurant.
I know. You still working at Ryan?
Yeah.
A lot of people eat the Thanksgiving dinner at Ryan's.
Yeah, and then Cracker Barrel's open too, and they was really packed as well.
Yeah. Well, I guess it's okay as long as you eat somewhere, but
But when I got off of work at 6 o'clock, Walmart was packed. The whole parking lot was
oh, I'm sure.
all the way to the end.
People trying to get those TVs.
Yeah.
So I went up to Walmart, didn't get up right at the beginning, and I didn't see any great deals that I wanted. They probably had some. Bill had some good sales, I guess, sometimes. But anyway, there's nowhere to shop down my way except Walmart or Bell. That's the two.
Do you go for the $99 34 or what was it, like 72-inch widescreen?
55. $100.
They probably sold out of those real quick.
Yeah.
It's not a smart TV either, is it?
No.
No, it's not a smart TV. So, but you don't need a smart TV in some situations, I guess. So, how about Cyber Monday? Anybody get any good deals yesterday? You did, Ryan?
Yeah.
What'd you get?
We got a bunch of quick cards. So I was able to get free shipping on the textbooks that I had to get next semester.
Everything.
And I get, since I bought them this year, I get to count them on this tax cycle. Sorry.
Now, hold on a minute. Free shipping. You don't always get free shipping on textbooks?
Now, when you buy through Amazon, you usually have to buy like $35.
Okay, so you got free shipping. Now, what do you mean taxes?
Like when I go and do my taxes for this year, I
Yeah.
get to use those as an expense that I use to my school.
You do your own taxes?
No, I have a CPA do.
Yeah, but, there is the, opportunity tax credit. If you paid your tuition and you paid your own tuition, you can take it or your parents can take it, but if you're working enough, you need to take it, yeah. But yeah, that will count for next year. Well, for this year's tax. All right, anyhow, we're going to look at chapter 10 today, the first thing. We got to start this one. We'll finish up both chapters on Thursday. Now, chapter 10 is depreciation. And you'll have all these, of course, And those 50 multiple choice. We'll go ahead and look at the PowerPoint a minute on depreciation. Now, Thursday, we'll try to get together bonus points for registration and, of course, for attendance. And some of you, did I give you a bonus problem to do in chapter 9, was it? 8, that problem 4, I think it was.
8.5.
Was it 8.5? I'll take that up right now if you've got 8.5.
Who's that? I did that.
Anybody else have 8.5?
Let's say if you're, yeah, one picture. I sent it to one of my friends today. He's like, yeah, it's my friend. So,
All right, for attendance will be 10 points, for registration will be 5 points, and bonuses will end up being 5 or 10 points. You can pick up as much as 25 points on your exam. So forth, at least 20, yeah.
If I did this, but I left it at home on my chair.
Oh, okay,
So could I bring it to you Thursday? If
I
not, that's
guess.
fine.
I suppose.
Email it? Oh, yeah, I can email it to you.
Well, you can do that too if you want to,
Yeah,
yeah.
I'll do that.
All right, how many of you still have not missed a day? 7 people, yeah, and how about the rest of you? Just missed one, who missed one day? That's good, all of you in here just missed one day or no days. That's excellent, folks. And you 10 that are here today do have the best grades in the class, of course. And class attendance makes a difference. Now, registration, who has not registered yet for next semester? We'll lose these 2 guys. But we will, we've already got 19 registered for next semester. I don't know where they're coming from. The night class, for one thing, I've got 10 in it. And there's a good 7 of you here, so. Anyhow, y'all will enjoy some of the students we're picking up. Well, some of them probably live stream. Okay, fixed assets. Now, when we have salary, we take salary as expense off our income statement. When we have utility expense, we take it off our income statement. Those are called revenue expenditures. But now when we get to fixed assets, we buy them for $100,000 piece of equipment. We can't take it off right now. It's called, we have to capitalize it. Capitalize it means we have to depreciate it. All right? And that's what we do with fixed assets. Now, depreciation, of course, we got to know the cost first. We got to add on everything to the cost. If I were depreciating a coal truck, I would even add the sales tax onto the coal truck. If the coal truck was $100,000, sales tax was $5,000, I'd depreciate $105,000 because that's its total cost.
Now, on the exam, are we gonna have to do both the double declining balance and the straight line depreciation?
We're going to have to do them all. 4 methods. You only mentioned 2. You're ahead of it. All right. On building, if we were building a building, we'd add on the architect's fees, engineering fees, insurance cost of construction, interest, sales tax, recondition if we purchase an existing building, and that's would be the cost. Machinery and equipment, we may have to add on sales tax, freight, installation. Those are the three big ones. And land, we add on the purchase price, permits, sales tax, broker's commission, title fees, surveying, taxes, past taxes. We want to remove an old building and grade it. That would be the price of your land. So that probably is in your first problem on chapter 10. Okay, so we buy equipment. Here we bought equipment. We added on freight cost. We added on installation cost. And we're adding on 500 due to an error in installation. Now, that's a minus because that should not have happened. So debit equipment and credit cash, that's a fixed asset. I'm not worried about the leases right now. Now, what is depreciation? It's wear and tear. And can be used exposure to weather. Now, your computers. Right, how new is your computer? They can be outdated in 2 more years.
That's outdated now.
Computers get outdated quick.
Because this has got the 7th gen core processor, and they already got like the 8 out and the 9's released next year.
Okay. I got a i7 cell phone, but then there came the i8, I guess the 8S, and then there came the X and the XS. So they depreciate fast, don't they?
Yeah, electronics, they have like.
So wear and tear is your biggest depreciation factors, but becoming obsolete is another big factor. Now, we depreciate all fixed assets except one. We don't depreciate land. Land usually goes up in value, and they call that appreciation. I think I told you all before. Women are like land. They go up in value. They appreciate. Men, they depreciate. And I hope we never become obsolete. The way the world's going, you never know. Anyhow.
Is there a set, kind of like variable how much your land appreciates? Like,
Now we can guess, and IRS has some guidelines for the life of a piece of equipment, a truck or a car, a luxury vehicle used in business, oil rigs, whatever. But land, there's no guideline and how much it goes up in value. Depends on the year. Real estate has made some people a fortune. The stock market has made some people a fortune. So,
So it's not like real estate, it's based more on speculation.
and inflation. Real estate goes up when inflation happens, okay? You can count on real estate going up at least 3 to 5% a year. All right. Now, depreciation, this initial cost, we're going to know its life, and we've got to know its scrap value. All right. And the residual, scrap, trade-in, salvage are all the same names, synonyms, I guess. All right, let's take this asset for example. Now, straight line depreciation is simply equal to the cost over the life. All right. And sometimes cost minus residual or minus scrap over the life. So take this little formula here and put these three figures in it and tell me what the depreciation is for 1 year.
That Bacon year or actual year?
5, don't divide by days, just divide by 5.
4,400.
How much?
4,400.
All right. So we've calculated depreciation for a whole year. Now we got to get used to part year depreciation too. Now on straight line depreciation, in this chapter, these methods are the big part of it. Pretty easy. Now, what entry would I make for this 4,400? I would debit depreciation expense, and I would credit accumulated depreciation. So in 3 years, what is my accumulated depreciation? 13,200. All you had to do was multiply 4,400 by 3, right? Okay. Now, what is my book value after 3 years? On your balance sheet, what's my book value after 3 years?
10,800.
All right. You took the 13,200 from the cost, didn't you? And that left you how much?
10,800.
10,800 book value after 3 years. Now, after 5 years, the book value is going to be the scrap. Now, that could be scrap value, disposable value, residual value, or trade-in value. If this were a pickup truck, you estimate the trade-in value will be $2,000 after 5 years. All right. You use it in business, so you put a lot of miles on it. All right. So, another example. Cost is equal to 100,000. The life is 10 years. And the scrap or residual value is 8,000. What is my first year depreciation? Remember, when I say scrap, that's the same as residual.
$99,020.
Can't be 99,000, maybe 9,000.
$9,999.
I don't know how you're getting $199 either.
Oh, I got it as $8.
Huh?
9,200.
All right, Ryan, can you get 9,200 on your calculator?
I put 8 instead of 8,000.
Okay. So 100,000 minus 8 leaves 92,000 divided by 10 is 9,200 a year. What is my accumulated depreciation after 3 years?
27,600.
27,600, right? Okay, that's one method, straight line. Now, we're going to take this same problem. But we didn't buy this until October the 1st, 18. Now, calculate part year depreciation for 3 months, October, November, December. All right, you're going to take that 9,200, right? Now, 3 months over 12 or 25%. So what is 25% of 9,200 or 3 over 12? 1/4. 2,300 even?
Yes.
That's part of your depreciation. So you know everything you need to know for straight line. All right. All right, there's three here. Intermediate for some of you take an intermediate. There's some of your digit method, but it's hardly used. RS does not use it. Some of your digit. But now we've looked at straight line. Now, going back, the same problem under units of production. All right. I would have to give you the life in units. Let's say the life in units were 500,000 units. All right. And once again, the same formula. Units of production is equal to cost minus residual value over the life in units. Now, do that and give me the depreciation per unit. That's 92,000 divided by 500,000.
That's 0.184.
I don't know. Somebody else try it. That don't sound right.
That's what I got.
0 what?
0.184.
Wait a minute. Your points are confused me there. Is it 0, 1?
0.18.
0.018.
No, 18.04 cents. Like 18.4 cents.
0.1.
We moved to,
Yes, but if you move it to a cent, it becomes 18.4 cents.
well, then I've got to leave my decimal here. Now, I'm going to tell you how many units were done the first year. What if 100,000 units were done the first year? Multiply it by that decimal 184 and see what you get.
184,000 or 18,400.
$18,400. All right, we'll have to practice that units of production. Now, the one method they mentioned here, decline in balance. You do not take out a scrap. No scrap is taken out. No residual or any of that. Now, you've got to know your percents. Now, if something has a 5-year life, what percent would that be a year? If something has a 10-year life, what percent would that be a year? 10%. Now, if something has a 20-year life, what percent would that be? You see, math has all kinds of reverses. 5-year life, 20%. 20-year life, 5%. Math has a whole lot of reverses. Okay, but now, what does this say right here? What's this word right here? So, we'd have to double that, and it would be what percent? 40%. Now, let's go back to our problem. What's my first year depreciation?
So you're saying when we do it this way, we don't put in sell.
Right.
So it's first year depreciation.
Yeah, what's my first year depreciation? All right,
$40,000.
exactly, Ryan. Now tell the other 9 in here how you got $40,000.
Equal DD, B, parentheses, $1,000.
Ah, you're mumbling.
Take 100,000, 20% of 100,000, you get 20,000 and double it. 40,000.
Well, 5 years is 20% a year. Just double that and get 40%. And then what is 40% of 100,000? Would be what? 40,000, wouldn't it? So Ryan, it was just 100,000 times 40,000. You could take all of your abbreviations and all those little letters you were throwing out there and keep them to yourself. You'd make a bad teacher, but you know your stuff, but you try to make it too complicated. Okay, double decline. Now, next question. Can anybody give me the second year depreciation?
$24,000.
Ryan says 24. He may be right. Now, you've got to take your book value every year. So your book value, you take that 40,000 away from 100 and that leaves 60. And Ryan looks to be correct. 40% of 60,000 is 24,000. How about your third year? What's the third year depreciation?
14,040 or 14,400.
That sounds right. Ryan took 24 from 60 and multiplied by 40. All right, now let's see what the author has to say about any of these. Okay, as I showed you before we got here, there is your formula. And this is in years. And they're showing you the depreciation, and they're showing you that it's 20% every year for 5 years. All right. But now they're showing you some other percents here too, which is pretty good. 25 years is 4% a year, 10 years, 8 years is 12.5. You see, even fractions are easy if you let them be. How much would 4 years be? What percent would 4 years be? How much a year?
25%.
You see, those of you who have trouble with fractions, 8 years is actually half of 4 years, and that's 12.5%. Because it's 1/8 a year, not 1/4. 1/8 is half of 1/4. We know 8's not half of 4, but 1/8 is half of 1/4.
Is there a way to slow down depreciation?
What?
Is there a way to slow down depreciation? Like
So-
you go in and say you got like a motor, and you restore a fan, you place a fan on it, make it run better. Does that slow down depreciation or?
Usually has values of that. It does.
Okay, that's a real good question. You don't slow down depreciation. You can re-estimate depreciation. Now, if I had something I was depreciating for 5 years, here's one way to do it. Now, let's say after 2 years, what is your book value? After 2 years, what's your book value? Straight line depreciation. It was 9,200 a year, right? All right, after 2 years, what is your book value? Is it 81.6? All right, I'd have to take my book value, 81.6, and say, hey, I want to have the same scrap value, but this thing should have been running for 8 years. I've already depreciated 2, so I can change that to 6. Now that's one way, But when you repair something, if you just put tires on a truck, a new battery, gas and oil, that's repair and maintenance. But if you put a new motor in that truck, it extends its life. And you got to reevaluate depreciation. Or what you can do, instead of, you can take it out of accumulated depreciation. You can debit accumulated depreciation and credit cash for the price of that motor. So you didn't add on to the value of the truck, but you took a whole lot out of depreciation because of that new motor. So there's 2 or 3 different ways. And it is important to know those. All right, problem. Now calculate me the first 2 years of depreciation under straight line and double declining balance. Calculate the first 2 years depreciation, straight line and declining balance, double declining balance. Are you going to go to Mr. Amos' interview? I'm thinking about letting mine out because you need to turn out. I got a class to do it, just say that now. Okay, so what is your depreciation for year 1 under straight line?
4,500.
And year 2?
4,500.
Exactly. Anybody have a problem with that?
Wait, what?
4,500, Margot.
I got 4,490.
Golly, what kind of fraction, dear, are you trying to use? Just take 5,000 from 50. That leaves 45,000 divided by 10 years is 4,500 a year.
Oh, is that not, I thought that was 5,100. That's right.
Oh, I'm sorry, dear.
That's okay.
Are you not used to my scribbling by now?
A little bit.
Okay. Okay, double declining balance, first year.
$10,000.
All right, 10 years would be what percent a year? Multiplied by 2 gives you what? 20% of 50,000 is how much? And that leaves 40. What's 20% of 40? Okay, those 2 methods are not too bad, are they? Now, however, we're going to take this a step farther.
I got one more question for you. How come on the straight line, they're the same numbers? Like for year 2?
It will be the same numbers every year, unless it's part year, yeah. Declining balance will not be the same numbers. All right, we're going to buy this.
Oh, sorry. I I think I was confused, the same thing you were, like, if he asked for the accumulated depreciation 2 years, it would be 9,000, because that's what I did first.
Yeah, that's what she was thinking.
Okay.
All right, thank you.
The accumulated be 9, but depreciation expense would just be 4,500. Now let's buy this thing on April the 1st. Give me 9 months depreciation for straight line. Year 1 and 2, and double declining balance, year 1 and 2.
Now, are we buying it April?
We'll buy it April the 1st. This is December the 31st, and you got to do depreciation for 9 months. For year 1, 9 months for year 1, 12 months for year 2. All right, so what is 75% of 4,500?
I got 3375, I don't know.
That's 75% of 4,500, or that is 9/12 or 3/4 of 4,500.
Yeah, same thing.
So what'd you get?
3,375.
385,
75,
75.
3375.
That's going to be the same thing. All the years in between still going to be 4,500, isn't it? Well, let's get rid of straight line and concentrate on declining balance. We know 20% of 50,000 is how much? 40.
Sorry,
20% of 50,000 is how much?
10,000.
And we're going to take 9/12 of that, which is 75% or 3/4. So your first year depreciation is what, 7,500? Now, your book, even intermediate, does it the long way around. For the second year, they would find depreciation for 3 months and then they would find it for 9 months. But that's ridiculous. You do it the same way. Take 7,500 from 50,000, find your book value. What is your book value after year 1?
42.5.
And you still just have to multiply that by decimal 20. Gives you the same thing that whatever way the book shows you. So what is 20% of 42,500?
85.
How much? Even? Okay. Now, what if I would like to leave today at 10:30. Yesterday I came up here and we had Diane Belcher. She's applying for the dean's job. I sat in on her teaching presentation and questions and answers, and we had to give the provost pros and cons. And Mr. Imel's doing the same thing this morning. He's applying for it also. And then tomorrow we have a third person from outside somewhere, and he'll do his tomorrow. And they're going to try to wrap it up, and we'll have a dean by second semester, hopefully. We'll have somebody in the dean's office. Dr. Bourne's been the acting dean, of course. All right, calculate me depreciation if for the first year we produced 12,000 units. Can you find me depreciation on units of production? How much?
3.75.
It would be 37.5 cents, dear. How about 0.375? Or is that right?
I mean, I just tell you what shows my calculator.
All right,
Don't you have to do 50,000 minus 5,000 divided by 100,000,
that's 45,000 divided by 100,000,
which is 45 cents?
which is 45 cents. Would you go wrong, Margot?
I thought we was using the 12,000 units. I thought that's what we were doing.
We will, yeah. Now multiply that by 45 cents.
5,400,
How much?
5,400.
All right, see that, Margot? Alexander, you got that? All right, now what if we bought this on April the 1st, 2018? If I produce 12,000 units, it don't matter, does it? Answer stays the same. So you don't have to worry about part year with units of production. I have taken you through the major depreciation method, and I think you've caught on pretty fast. I mentioned book value to you. Cost minus accumulated depreciation is book value.
And is it true the only reason most people do double declining balance anyway, so you wipe out most of the value of the product in the first few years of operation?
No, that's not why you do it. Straight line depreciation, in one case we had 4,500, let's say, but on double declining balance we had 10. These are expenses on your income statement, and using this method, if you're a young company, saves you income tax. You have 5,500 less gross profit, 5,500, I mean less net income, and you pay taxes on 5,500 less. But Ryan, you're bringing up good questions. Okay. They call it units of activity. I call it units of production. Same thing. Now remember, a unit don't have to be you're producing a widget. We produce 100,000 widgets or gadgets or gidgets. It can be miles. It can be units. It can be hours. We can depreciate computers by the hours used.
Is there like, I mean, is everything have depreciation?
Yeah.
Like,
Any fixed asset used in a business, except land, depreciates.
it's like a state road and a paved highway. What do they use? Is that considered?
You can depreciate pavement. I've had farms where I depreciate feeding troughs. I depreciate gravel roads because I depreciate fences. This fellow one time had a parasail. I had to look up and try to find the life of a parasail. He was teaching or giving rides on the lake. I had to depreciate a parasail, but you had to appreciate everything. Except women. Okay. But all right, this was the units of activity and method. Same formula I told you. Same journal entry, debit depreciated expense, credit accumulated. Double decline balance, we've looked over it. Now on a multiple choice question, I'm going to ask you which method does not take out scrap value? Double decline, we just went over it. Most likely that is one of your 50 questions on your test.
Can you go over some more of those?
I am, as we go.
Which one did you say didn't use the months, the units? The units don't use the months, right?
A unit, you'll have to worry about part year. Once you find how much it is per unit, I don't care if you produce 4,000 units in 3 months or 4,000 units in a year, it's the same depreciation
Which one is that?
units. Now, here is a good example of declining balance. You start off with 24, 5 years, and you take out your depreciation is 9,600. All right. Now your second year, your book value is 14. You take that times 20%, and your third year and your fourth year. But I want you to look at the fifth year. There's something funny about the fifth year. We did not multiply it by 40%. Why?
Because
We do not take it below scrap in that last year. Remember, your scrap on this one was 2,000. We don't take it below 2,000.
Who determines the life?
Well, over the years, they pretty much know how something lasts.
Okay, let me, this is not exactly.
There's just historical records, and IRS has some lists also.
Okay, so like one of these concrete plants that have a big old crusher, crush gravel to make concrete. Okay, if that piece of machinery runs past the year that whoever liked it, does it become negative, or when does the depreciation stop? After the life, but this one has to be determined.
Well, it has a zero book value. Well, you can still use it. You just don't get any depreciation expense for it, for your tax purposes or for IRS. Yeah, you can depreciate out 100% in 5 years. You still may be using that piece of equipment after 10.
So it would never go negative, I guess, is what I was trying to ask.
Never a minus.
Okay.
And for IRS, if you got 5-year depreciation on a piece of equipment, and for some reason you forgot to take it year 3, you lose it. If you don't use it with IRS, you lose it. All right, there's your 3 methods.
there's no declining straight line, unit, and partial unit.
We looked at part year. Now, I told you about revising depreciation. I'm not going to spend any time on that. I don't have much time if I'm going to go to that meeting. But what we've got to look at, repairs and improvements, that was your question. And we've got to look at maybe trading an asset, but we've got to look at 2 other things. Yeah, we've got to look at discarding an asset. So please read this chapter well by Thursday. All right. But we've also got to look at selling, discarding. We're going to look at natural resources. That's called depletion. Depletion is the same as units of production method of depreciation. We deplete coal, oil, even a rock quarry, salt, any precious metal, any natural resource has depletion. Timber, you can deplete timber according to the board foot. If you sell out of timber, a board foot is 1 inch by 12 by 12.
If you grow hay, it grows back every year. How do you do that?
If you go what?
Hay, straw, like in a field.
There's a different thing.
It's not a natural resource. That's just farming. That's just a crop.
Okay.
Well, that's just a crop.
Okay.
If you'd be doing farming, and if you sold that hay, you'd have revenue. If you fertilize it, you'd have an expense. If you cut it, you have an expense. Okay, so the cost of a natural resource over its units gives you depreciation per unit. Same as units of production, right? Okay, running out of time, I want to mention one other thing. Intangible assets, patents, copyrights, trademarks, goodwill. All right. A patent You fellow engineer ought to know what that is, don't you? Okay. You folks that like literature ought to know what good, a copyright is. All your textbooks have a copyright on them, don't you? Well, what is the trademark on this pure leaf tea?
I don't think there's a trademark on that one, but there is a trademark on that. I think that's the R.
Does this not have a trade name?
I don't know if that's
Lipton.
Pure leaf, I guess. Pure leaf, the name of it.
Yeah.
Yeah, Lipton.
That's a trade name. Is that leaf then not a trademark?
I think Lipton's the trademark.
Yeah, Lipton's the trademark. Pure leaf is.
Okay. Lipton?
Yeah,
Okay.
like Molten is the trademark.
Yeah, you could even advertise a jingle or a slogan, what have you. Okay, this has to be told. You have to be told what these are for. If it's 17 years or what. Now, that's a little bit of a wrap up on chapter 10. So, read chapter 10. Be doing all your sin gauge. Now, on chapter 9, I want to give you a bonus. I'm just going to give you a 9.6a as a bonus. Now on 10, I want you to do number 2a as an assignment. All right, you're out of here. I'm going to go to that meeting for a spell.
So we just need to reach chapter for your schedule Thursday.
Yes, we got a whole lot of wrapping up to do Thursday. I know all of you will be here Thursday, and I hope those who are viewing today will be here on Thursday. For the last class, I hope you can make it. Have a good day.